Hi, and welcome to Empower Hour, where we sit with top producers and executives in the business who share valuable insights so we can all learn and grow as a company. And today we have with us Scott Wimmer. Thank you for joining us.
Thank you for having me.
Scott drove all the way here from Blacksburg yesterday. He is the Blacksburg branch manager here at First Heritage, and he has been with us for 8 years now. Is that right?
A little over 8 years, yes.
All right. How long have you been in the business, Scott?
November will be 29 years.
29.
Yep.
That's amazing.
That means I'm very old.
No, you're just very seasoned. That's all.
Seasoned.
You're right.
Wise.
We're wise,
Yes.
right. But you've done a lot of things in the last 29 years, that's for sure. You have been nominated as a Mortgage Executive Magazine top 1% originator. You've made several Chairman's Club trips, President's Club trips, and created and taught business building systems to realtors, amongst many other things. So why the mortgage business? How did we get here?
Well, it was, I started off in a family business when I was 10, 12 years old, grew up kind of an entrepreneur type of person at that point. And, realized I didn't want to stay in the family business when I was in my early 20s. Spent a couple of years actually selling manufactured housing. And that was my first experience to finance transactions, which I really, really enjoyed.
Okay.
When I was in the manufactured housing business, I met this broker that used to do the loans for the dealership that I worked for. And I realized that I wanted to get out of that. So I approached him at this time that I was going through some changes in my life.
Right.
And worked under his license, doing subprime lending for about 9 or 10 months.
And did you know what subprime lending was then?
No, I really didn't. It was just kind of like, we'll figure it out. He had no clue. He did manufactured housing loans on the Fannie side.
Okay.
So I'm like, I think there's some money here. We'll figure it out.
Yeah.
And so I worked under his license for about 9 or 10 months, decided to get my own license, and was able to do that because of the financial advising background that I had. And I started my own mortgage brokerage, folding chair, a used desk, my computer from home.
Right.
And I rented off my CPA, and he gave me a 3-month get started plan with no rent. So that's how it all started.
90 days to get it moving, huh?
Yeah. And then fast forward, that was late 1997.
Okay.
And then fast forward to 2009, after the big financial meltdown.
Yep.
I had grown to 5 offices, 3 states, 23 loan officers.
Wow.
So,
amazing.
Yeah.
And what was your kind of building blocks? How did we get from that place to the other?
In those 13 years, it was just really not a lot of structure. I was just trying to figure it out. I went into that with no mentor at all.
Yeah.
Just having to figure it out from day to day. And it was difficult to try to do that. Then the mortgage crisis and the financial meltdown was probably the best thing that ever happened to me, because it forced me to make changes and actually go to work for the retail side.
Okay.
And that's when everything's changed.
Everything changed. Yeah. Very good. So what are some things, or how did you build your systems, if you will? I know that that's something that we talk about a lot here at First Heritage, but in the mortgage business in general, about creating that system. What works for you? How do you get from point A to point B?
Yeah, I mean, the systems actually started back when I was a broker, because back then it was before all the licensing requirements. So with 20 plus employees doing loans, it all fell on my license. So they had no liability. I had all the liability. So you had to have a lot of systems in place for that. And then we got really good with systems. One of our wholesalers that we actually sold loans to had a program to where we could actually underwrite our own loans as mortgage brokers. Okay. They started out with 2,000 people in the country, 2,000 brokers. 1 year later, they had 17, and we were one of them. And 3 years of that program, we had 0 deficiencies. Yeah. Because we had good systems in place.
Yeah. So is that what you feel set you apart from other people?
I think that started it, because our approach to referral sources for agents was, we have the ability to control this whole process. We can do it faster than anyone else.
Amazing. Yep.
So,
well, as our president, Steve Logano, always
Yep.
likes to say, you can do a loan. It's easier to do a loan in 2 days than it is in 30. So is that an approach that you feel you've always?
Absolutely. And if there was a way to do it in one day, we'll get there.
So how do you do that? Because there's no secret in knowing that your numbers and you're not only in your branch, but you specifically, you get your loans clear to close faster than anybody else here. So what is that? What sets you apart? What do you do?
Well, I think the biggest thing is it has to evolve with the business because the business is changing all the time.
Mm-hmm.
Every company that I've worked for has had different systems and changes within those companies as well. So it has to evolve. But I think where it really changed was at the prior company, I had a really good loan officer assistant and we worked so well together, and it was just the two of us.
Mm-hmm.
And that was back when we did almost 200 loans one year. But we actually started tracking. I'm like, how do we get better at what we do? So we started tracking every underwriting that came back. And for a solid year, we had this massive spreadsheet.
Yeah.
We tracked every borrower condition. And as these borrower conditions were coming back, it's like, okay, this one's duplicated.
Okay.
This one's, we got this one 4 times this month. Is that a piece of the puzzle that we can get in the beginning of the loan and not have that condition? And we kept working that system to where we got it down to where we had an average of 2.1 borrower conditions on a file. That was it.
Wow, that's great.
And those were conditions that you couldn't get in the beginning, like clearing EMD or maybe the gift transfer or whatever it may be. So we had a lot of loans that were one and done.
Got it. How did you gain that? I don't know if I want to say confidence, but how did you get to that place with borrowers where you were, let's say, confident enough to ask those questions and say, hey, I need this, and I know I need this, and I know that your life will become easier later down the road if you give it to me now versus waiting for an underwriter to ask and then, take that later route?
I could give you a simple answer, but it really goes back to when I was a financial advisor.
Okay.
Because when I was a financial advisor, I had an awesome guy that was my mentor.
Okay.
And they had a really good system of training people and understanding human behavior.
Okay.
And if you understand human behavior, you can get people to do about anything you want them to do.
Sure. Tell me more.
So there was this model that they used called social styles.
Okay.
Social styles it's not a personality test.
Okay.
The social styles is a concept of how people make decisions.
Okay.
Usually how they would respond in a fight or flight moment.
Okay.
So when we go through our daily life, when we're at home and we're at work, a lot of times we're 2 different people in those scenarios.
Sure.
Right? But when a person gets backed into a corner, they're going to always go back to whatever their core social styles are.
Okay.
And the one thing that I learned was everyone has a primary and a secondary social style.
Sure.
So when you look at it on a grid, you've got this top to bottom and left to right.
Mm-hmm.
And there's common characteristics in opposite of left to right, opposite of top to bottom.
Mm-hmm.
So when you start understanding the differences in those social styles and what the primary need is for those social styles, asking the question is maybe just asking it slightly different from one person to the next.
Okay.
But in reality, getting information from customers is just asking. I hate to make it that simple, but it is.
Do you find that with the newer generations who are big into social media and technology and everything, do you find it harder now to determine their personality style or their social styles?
I don't.
If you're not talking to them on the phone, or has that not changed for you?
I don't. We learned social styles from every aspect of financial planning, from phone calls to meeting face to face with clients, and then it's evolved because you got to remember I started doing that before there was the internet.
Sure.
So now we have email, but I can generally start to determine someone's social style just from the email they write.
Okay. All right.
So when you start looking at just the left and right parts of the grid, if you have an amiable and an analytical on the left side of the grid, and you have a driver and expressive on the right side, those are tellers. They are going to talk. They're going to tell you.
Right.
The left side of the grid are going to ask questions.
Okay.
So you can start to break it down left and right or top to bottom fairly easy.
Okay.
And you can also, if you can get it half right,
Mm-hmm.
you're going to be above most people as far as getting people to do what you want to do. But it's
Got it.
really just asking.
How do you then evolve your relationship with them, or your answers, or your back and forth? How do you kind of evolve your style based on that?
Well, I'm subconsciously, I guess now, I don't have to think about it as much,
Okay.
identifying where they're coming from.
Yeah.
It all goes back to more, regardless of what their social style is, I think loan officers have to take a consultative approach.
Okay.
And not make it a commodity. We're just selling a loan or a
Sure.
rate. If you make it consultative and look at it from the way we did from financial planning, you're making that loan fit their whole goals of what their financial goals are,
Sure.
what they're trying to achieve as a family. And that tends to make it a little bit easier to get what you need.
Okay. Very good. What would be, I know you talked about, with their social style. So you're learning and listening, right?
Yes.
Now, how do you deal with those borrowers who aren't very good at learning and listening on their side?
Well, I don't know that there's well, I guess there's some that don't want to listen. So that's going to automatically put me more into, they're probably on the right side of the grid. They're going to be generally the one out of the four social styles that will ask the harder questions, that will push back on giving you something, is going to be more of the driver type of person, because the driver type of individual wants to control everything.
Right.
But you have to learn to use it to your advantage.
Right. So those borrowers who call you right away and just say, "Hey, Scott, what's today's rate?"
Yes.
Where do you go from there?
So when you're talking to that person, if they ask that immediately, you have to start looking at, is this all they know to ask?
Sure.
Or is this person really a driver?
Okay.
And you have to go that route with it, because a lot of times people ask that because they just don't know what they're supposed to ask.
Sure.
So it could be something of, what's important about the rate that you're looking for. And it usually will throw people off guard a little bit because no one's asked them that.
Right.
So, and they'll tell you, well, look, we're buying 20% down. We've got 780 credit scores. I just want to know what your rate is. Great. Let me pull those up. I may already have them up, but while I'm pulling those up, so tell me where you're buying. You're buying here. Okay. When is the house done? Is it new construction? Whatever it may be. So I'm gathering information while I'm pulling the rates up. So in their mind, I'm giving them what they want, but really I'm delaying to get through the question. Get to know them a little bit better
too, right?
Exactly.
Okay.
So then by the time I get to the rate, the question that I like to ask, if I've determined that they're a driver individual and they really just want that rate and they're going to close in 30 days, it's pretty easy for me to give them that. And I will give that person a rate that day.
Yeah.
But if you can diffuse a lot of it if you just ask them, what do you know about the way 30-year rates are priced? They usually don't know anything.
Sure.
So then that leads me into, well, do you know what your credit scores are? Where are you getting those? How are you getting your rate information? What are you expecting the rate to be?
Yeah.
So you can start that type of questioning before you actually give the rate. And then it's going to be more like, okay, if we were starting today, this is what it would be.
Yeah.
And then depending on what they say and how they react would determine what my follow-up would be.
Very good.
But it's not difficult.
Sure.
I think some loan officers have a tendency to get maybe more of a defensive approach on it.
Okay.
And you have to look at it from the customer's approach. One, they either don't know what to ask, or it's truly important to them. So the job as a loan officer is to find out why it's that important, because they're asking about rate, but what are they really asking?
Sure.
They're asking about affordability in most cases.
Yeah.
So if you solve the affordability issue, or what the real question is, and you have to be able to ask open-ended questions to get to that point.
Okay. Makes sense. So with the rate and the affordability, how do you get them to nail down and be ready to lock? Because I feel like, it's rates, obviously, what do they say? Rates move up a lot slower, but move down a lot slower, but they move up pretty quick.
Move up quickly.
So what's the best approach that you take with?
So I think that approach goes back to what the social styles are. And it also goes back to how well you are at positioning yourself from a consultative selling approach. So let's take a Stanley Martin customer for the moment. their house may not be ready for 60 to 75
Sure.
days. We're not going to lock yet.
Right.
So that gives me a lot of time to really foster that relationship
Yeah.
and take that consultative approach, depending on whether they're, an analytical or an expressive or a driver. If you take the bottom grid, if you take
Sure.
the amiables and the expressives, by the time I get to that point, it can be, hey, the rate today is 6.5. I think we should go ahead and lock. I'm looking at protecting you an extra 7 days past the projected closing date. And they'll be like, okay, whatever you think.
Yeah. Okay.
And that's where you want to get.
Sure.
With your analyticals and your drivers, the analytical, you may have to send them something in writing that shows what the actual breakdown is, and they're going to do their own due diligence.
Mm-hmm.
The driver, if you've developed the right relationship with him or her and make them think that they're in control of it,
Right.
their primary need is getting from point A to point B as quick as possible.
Mm-hmm.
But both of those top two pieces of that grid, I always give them a choice. If you notice on the bottom two, I don't. I say the rate today is this. I think we should go ahead and lock,
right,
or whatever it may be. But on the top ones, I give a choice, because the analytical is going to need a choice, because they're going to have to determine in their own mind that what they're doing is the best thing.
Yeah.
The driver doesn't want anybody to dictate to him what he's supposed to do.
Sure.
So you've got to give them a choice and then let them pick.
What advice do you have for, especially our newer loan officers in the company, or, even with some of our seasoned loan officers? What is the best advice that you give them in order to have those intro conversations with borrowers, or to be able to learn some of the social aspects, social skill of determining what type of, borrower they might be?
Yeah, social styles takes a long time to learn. I mean, you can Google it now, which you couldn't back in my day, but and you can learn a lot. It can be very confusing, and it's very easy for people to make the wrong determination if you haven't role played it and actually been coached on it one-on-one, or in groups.
It's also like making a script too, right? Like what is the best way to kind of put that together?
I don't do scripts, but because that's more of the social styles background, is my script would be 4 different scripts.
I see.
If I had to
based
do that.
on the type of individual you work with.
And then it gets really confusing when you have husband and wife both on the phone, because 9 times out of 10
they're very different.
They're complete opposites, right? So you may have driver amiable, or you may have an analytical and expressive, which are complete opposites, and that's typically the way most households work.
Okay.
So then you have to cater to both.
Okay.
And make sure that both are taken care of and not ignored.
Very good.
But the original questions, it really just goes back to open-ended questions. Share with me what it is that you're wanting to accomplish with this. Tell me more about this transaction. And if you ask those open-ended questions like that, they're going to talk.
Right.
I would say one of the key things if someone is starting to learn how to identify these different characteristics, rate of speech, softness or loudness, the volume of their speech can make a difference.
Okay.
If their emails to you, if their initial email to you after they've been introduced is very wordy or very short. If anyone in this company has ever received an email from me, you'll know it's a very short email.
Right.
It's to the point. It's A to B as quick as possible.
Yeah.
And that's the way it's going to be.
Very good. I mean, even with going over emails and stuff with your borrowers, you're still on the phone with them, right?
Yes,
I mean, that's always your goal, to find that time to talk to them.
Yes. I don't want to make a total determination of anything based on that. And the more that you can ask those open-ended questions and get people to talk, you're building that relationship. You make that rate lock a whole lot easier. And I think you asked me too about the rate locks. I don't let people wait on the rate locks.
Yeah.
I mean, if they want to float because they think the Fed's going to drop the rate, it's like you have to tell me 15 days out.
Yeah.
There is no 10 day. It's 15.
Yeah. Right. Oh, 15 days. Okay.
That's my rules.
15. Okay. Do you set those rules too and those deadlines for your borrowers when it comes to insurance and providing documentation? And do you kind of
a little bit different with our
them
spot
accountable that
deals
way?
versus Stanley Martin.
Okay.
With spot deals, it's an immediate ask.
Okay.
If we're locking the rate today and starting their loan today, it's who are you using for insurance? Have you got a quote yet? Do you have an insurance agent? Do you need a referral?
The conversation is immediate.
It's immediate. You get on it now.
Okay. So you're having those conversations. Borrowers already have that in their mind. It's not like it's a surprise coming towards the
Yeah, I
end.
mean, if you think about it, especially if somebody's buying, if they're selling and moving, and this is something that kind of plays into getting those documents up front
Sure.
too. I would rather bother you now
Right.
and get everything I can up front
Right.
because I don't want to bother you when you're packing.
Well, it goes back to customer service
Right.
levels too.
You know, if you're backing and you've got kids and you got to move them and you might be changing schools, you might be changing jobs and you may be moving halfway across the country,
Yeah.
give me what I need now.
Yeah.
And that way you can concentrate on the things that are important to you with your family.
That's great. So with your social skills, or I don't know why I keep calling them social skills, but your analytical approach for identifying the borrowers, do you roll that? Do you use that to evolve with your realtors as well, or?
Yeah, I mean, I think it's just as important with agents in your relationship with them. I mean,
Okay.
if you social styles is really going back to behavior and how people make decisions and how people interact with each other. So
Mm-hmm.
it's just as important with agents or any
Mm-hmm.
referral source as it
Mm-hmm.
is with your buyers, and maybe even more important in the beginning if you're newer and you're trying to build relationships
Right.
with those agents.
Right.
So you have to. I think a lot of times newer loan officers will finally get an appointment for coffee or lunch,
Yeah.
and they spend so much time trying to build rapport and talk to the agent. They never really ask for business. They never really get to a full business conversation. And you
Okay.
have to find ways to be able to do that. And you can do that sometimes just
I
through.
think there's definitely breaking that barrier with some of these agents, especially the ones who've been, who've been in the business for a long time, who have their set core of lenders they might work with or whatever. What is the best approach with that?
So it's interesting. I started approaching this small group of agents that spun off
Yeah.
from this other brokerage. I guess they did that a year ago.
Mm-hmm.
And I started talking to this group. I knew them personally, but
Mm-hmm.
they had always used another loan officer at a credit union.
Sure.
Very close relationship. They worked together before. And I'm like, well, I'm still going to take them out. And we went out. I found that one of the best ways to develop those types of relationships and get it towards business is asking them what the pain points that they're seeing
Okay.
in the current markets.
Mm-hmm.
What's been their recent experiences? How are they dealing with online lenders?
Okay.
That's a great question because I've never met an agent that likes an online lender,
Sure.
but yet they're all closing loans with online lenders.
Okay.
They've all had good or bad experiences with,
Yeah.
the Better Mortgage or the Rocket Mortgage and things like that, but they don't like it because
Mm-hmm.
they lose control.
Sure.
So getting them talking about those types of things,
Mm-hmm.
then you have to figure out what makes you different.
Sure.
They may not ask you, but if they ever do, you need to have an answer to it. But if most every new loan officer will go to an agent and they will say, I'll be available after hours. I'll be available on weekends. I'll provide good service. It's funny. You sit down with an experienced agent like that, like this guy, his name was Skip. And I'm like, have you ever had a loan officer sit down with you and say, I'm going to give you terrible service. I'm not going to answer my phone after hours.
Right.
And he's like, no, never have. And I'm like, that's all most of them know how to say. So let's talk about how we can do things different.
Mm-hmm.
What's your pain points? How do we fix them?
Right.
And then how do you help them find a way to get that online lender to you? Maybe they couldn't get it to the guy at Freedom First
Mm-hmm.
Credit Union,
Mm-hmm.
but maybe they can get them to me by a simple question to their customer that might be something like, they may ask their customer, Lindsay, how open-minded would you be to talk to my local lender? He might be able to save you thousands of dollars of money.
Sure.
Would that be worth 5 minutes of a phone call?
Right.
I know you're already working with Rocket, but
Right.
one, I've set it up by saying, how open-minded would you be?
Mm-hmm.
So if you get, and you can do that with agents too. That's a great question to ask, is how open-minded would you be? Most people want to feel like they're open-minded.
Sure.
So you don't say, would you be open-minded? Because you only do that if you want a decision.
Okay.
That's a yes or no. But how open-minded?
Got it.
So when you
steer away from the yes and
when
no's.
you go to how open-minded, subconsciously you want to be open-minded. So you're going to, I'm open-minded.
Got
Yeah,
it.
I could say that.
Yeah.
So let's try it on the next couple of people that you get
Yeah.
that are using an online lender and see if you can't get those over to me. And then I can show you what I can do.
That's great. I know well, obviously you've got great conversational rules and everything with realtors. How do you utilize that with some of the training? I know you've done training with realtors before, and was it more of like your financial business type
No,
stuff that you did with them, or?
well, this gets back to that whole relationship thing.
Yeah.
A loan officer and all your competitors are going to go in and talk to these agents, and they're going to talk about good service, answer my phone, blah, blah, blah.
Yeah.
We close loans quick, blah, blah, blah. Nobody really cares.
Mm-hmm.
They don't care
Mm-hmm.
because they're probably not having trouble getting their loans closed anyway.
Yeah.
So what makes you different? So one of the things that I've always done to make things different, I don't really talk to realtors about product.
Okay.
I don't.
Yeah.
Not unless they ask me, do you have a specific product? We all have the same products.
Yeah.
There's very few that are different.
Mm-hmm.
So I don't talk about it.
Okay.
We can do it. Sure. We've got an outlet for it. We'll find it.
Yeah.
You want to talk about things that the other person's not talking about. So if I can teach an agent or a group of agents about just basics of social styles, which I did. I did a group of agents. This was several years ago. There was 35 agents. I did a whole little hour-long thing on social styles. And then the following week, one of the agents came into my office and said, he said, I'm working on this home inspection. We're back and forth with this agent at this other firm. He's like, I think they're this social style. But he said, I'm not getting anywhere with it. So I said, well, tell me more about it. And I said, tell me, what's the email say? And he pulled up and he read an email to me. And I said, what's the cadence in his speech? You know, is he very short with it? Is he giving you too much detail? So we went through these whole questions. I said, you're close, but you're wrong. I said, go back and use this approach and do this. He came back in my office 2 days later and said, problem solved. He said it worked.
That's great.
So there's little things that you can do like that.
Yeah.
And I've also done, I've built systems to teach agents on how to generate more referrals for themselves.
Yeah.
Instead of paying for leads.
Mm-hmm.
So when you're teaching them how to build their business and you're not talking about product,
Mm-hmm.
that's one of the big things that I think. Also did one of my best agents now is a Caldwell Banker agent in Blacksburg that when she got started, she was sent to me to learn some basics on finance. So I brought her, it was actually 2 girls. One didn't stay very long, but they came in, we sat in the back room, pulled it up, and I've got a whole little presentation on how to avoid your file falling apart. I didn't talk to these agents. They were new. I didn't talk to them about finance. I didn't talk to them about product, interest rates, nothing. I said, here's where the mistakes happen. This is how you get your business to grow without having these issues. She's one of my best agents now.
That's great. So teaching, obviously.
Providing
the knowledge and
teaching
an exchange of
that,
knowledge
that no one else is going to talk about.
Yeah.
That's the difference. At least it has been for me.
Yeah.
So.
Well, what about those borrowers that you're talking to who you're trying to provide that knowledge to as well, right? And maybe you're nervous to ask them for something, or they're not inclined to provide you with the information that you're looking for.
So, I mean, you get those occasionally. I think more loan officers think that more people are like that than they are. I will run into one of those customers every 1 out of 25.
Okay.
That just push back.
Mm-hmm.
If you set it up right, they don't know that you don't need what you're asking for.
Mm-hmm.
But I also don't wait to the end. I ask for everything at pre-approval.
Mm-hmm. Okay.
Because at pre-approval, if it's a Saturday afternoon and they want to write a contract that night, they are more motivated to give me every single thing I want then than 10 days after we're under contract.
Sure. Which that makes a lot of sense for your spot business. But what about the builder business that's not closing for
the builder business? We still, with Stanley Martin, we get to use the same way because they have the 10 days.
Sure.
Right. So we can still push it for that.
Mm-hmm.
When they were under their old system where we did the pre-quals, I still asked for everything up front. And the reasoning behind that was so that when they do write the contract, it's easier for us to meet the 10 days for the conditional approval.
Yeah.
They don't know.
Yeah.
There's no reason to have any reluctance to ask
Yeah.
for W-2s and pay stubs and asset statements.
Right.
There's no real excuse for it.
Right. So big 3 key takeaways we have, Scott. We've got learning someone's social style, right?
That's the difference maker.
Difference maker,
Mark.
right?
Yeah.
Right. Asking open-ended questions.
Yeah.
Always open-ended questions, and the sooner the better.
Yeah, and I would throw a fourth one in there.
Okay.
You have to listen.
Right.
Whether it's an agent or
Mm-hmm.
whether it's a borrower.
Mm-hmm.
I'll give you an example. Victoria and I in my office, we met with this another little tactic too. If you start to build relationships with agents, especially if you're new and they like you,
Mm-hmm.
use that agent to meet other agents.
Sure.
So this agent that's my best one at Caldwell Banker has this new agent that's coming in that's going to be really, really good agent.
Mm-hmm.
I'm like, you mind setting up a lunch?
Sure.
For all of us. She arranged the lunch, everything.
Mm-hmm.
Brought the new agent in. And we're out in the parking lot. We're getting ready to walk in the restaurant. She is like, I'm negotiating my first home inspection and not sure how that's going to go. And I didn't say anything then because we're outside, we're walking in, but I banked that information because I was listening. And then at the right time when we're having conversation, I'm like, tell me more about this home inspection that you're going through, which led into how are they going to deal with the home inspection, any cost, how do they get those costs taken care of, which led to her calling me on a Saturday afternoon in the middle of the negotiations, asking how the contract needed to be structured in order to make sure that it could go towards closing costs.
Right. Right.
So listen, you have to listen.
Well, we've gotten to our final 3 here, Scott. You've made it that far. Lucky you. What is the best piece of advice you've ever heard or received?
You're putting me on the spot for this one. The best piece of advice for sales in general or just in life in general?
What in life? That has helped you.
The other person comes first, right? I don't care who you're talking to.
Right.
Whether it's spouse, kids.
Right.
Right? Whoever you're talking to, that's the one that's important at that time.
Yeah.
And you have to put them first.
Okay. I like that.
So,
what is the worst?
The worst advice?
Yeah.
I think the worst advice, and this is going to sound horrible.
Okay. I'm ready.
But the worst advice probably came from my father.
Oh, okay.
Yes. So we're going to dig deep into this one. My father, they had self-employed business growing up. From the time I was 10 years old, I worked in this business. And that's the way that it was to be done. You work for yourself. Mm-hmm. And I worked for myself 13 years with my own company.
Yeah.
And hated every minute of it.
Interesting.
Learned a lot.
Yeah.
I hated it. I didn't really enjoy the mortgage business until I got to the retail side.
Okay.
Because then it became about the customer. It wasn't all the minutia that you deal with in running the business and employees and health insurance.
The personal growth and gain.
Oh,
yeah.
It was horrible.
Yeah. Yeah.
So you get to focus on what actually attracted me to the business to begin with.
Okay. Very good. I like that. If there was one thing you could tell your younger self, what would that be? What knowledge bomb would you drop on your younger self?
I'm trying to think how I want to put this. If you haven't determined my social style at this point in the conversation, you have to understand your own social style.
Okay.
Before you learn anyone else's.
Sure.
And I say that because you have to understand how you make decisions to know how to adapt to everyone else's.
Yeah.
And my younger self was all about me.
Okay.
Not the other person.
Got it.
So I should have made it all about the other person.
It goes back to your best advice. Yeah.
It does. That was probably the biggest thing.
Yeah, that's great. Well, thank you.
Yep.
Appreciate it very much, Scott.
Yeah. Thanks.